Wilfred in the house. Welcome to the Halftime Report. I'm Scott Wapner. Front and center this hour, the record high playbook. As the second half is about to get underway, we debate the road ahead with the investment committee. Joining me for the hour, Joe Terranova, Steve Weiss, Jim Lebenthal. We will go to the markets. We're green across the board. Our question is, what happens now? We've been able to claw our way back from those lows in February. Goldman Sachs' Tony Pasquarello, guys, says the path of least resistance is higher. Morgan Stanley's Mike Wilson of bearish past says still bullish on a 6 to 12-month horizon. And even our resident bear has come around.
I prefer resident Grinch.
You are the Grinch.
Yeah.
Dracula, the Grinch, whatever the audience wants to call you today, they can call you. This is cable, so they can call you anything they want.
Anything they want.
You've fully kind of capitulated. I mean, you're fully invested.
Yep.
And whether you are comfortable with that or not,
yep,
you're playing this game as though the market's going to continue to go up.
Yep, and I've been fully invested for a while, but when I'm fully invested, you get kind of nervous, right? Particularly when you have the amount of beta that I have in the portfolio, given the tech names that I own, which comprise the majority of the portfolio, the vast majority. But, this is really just an interesting market, and I've talked about it before. I think we have a new cohort of investors, over the last, 15, 17 years are just used to V-shaped recoveries. And that's probably the right thing to do, because that means you're always staying invested.
Yeah.
You're buying on the dips.
Let me ask you this question.
Yeah.
I'm going to ask you to be a little introspective. I know it's difficult for you to do that.
It's very difficult. Wait, let me call my humility.
What do you think that you and maybe some of the others who are more cautious underestimated about the market environment from where we were at the depths in February?
I think I underestimated their tolerance for chaos, lack of direction, and risk. I mean, you still have corporates frozen. We just heard the CEO of HSBC in the U.S. talk about not really a lot's going on. There's a lot of uncertainty among institutional investors. And that preys on CEOs who are loath to invest major capital into their growth because they don't know where you'll be able to grow. And supply chains, they're moving. They're not frozen, but they're moving not the way you want them to move.
But if you invested, I don't mean you personally, but if the typical viewer invested based on what the average CEO or average hedge fund investor said over the last 6 months, you'd have missed a good portion of this move because there's been a lot of caution. Certainly, as you said, on the institutional side, there's been a lot of caution in the C-suites, and much of what they've been cautious about hasn't materialized for in large respects.
Yeah, and to be fair, I don't really care what the average hedge fund manager says, but I know exactly what you mean.
The point I'm making is where sentiment was from those cohorts.
Yeah. Sometimes it takes a while for things to play out. So it's not instantaneous. And that's why I'm still cautious about this quarter's earnings, what the guidance will be. Now, I do believe they'll get a reprieve, despite Trump saying he's not going to extend past the July 9th deadline. We know what the narrative will be. I've got so many, potential trading partners or ex-trading partners, whatever terminology, that are so close to the deal. They're showing good faith. I want to give them a little more time. Because keep in mind what the narrative has been 2 months ago. We have 20 deals that are going to be announced this week. We haven't seen really anything. We've seen some sort of a deal with the UK. Our top trading partner, our friendliest ally out there, give us something, but not much. So I think as long as you avoid just a really strong case against trade, right now people are comfortable with the 10% baseline tariff increase.
Joe? So we hit these record highs. We're going to turn the page to the back 9 of the year. What are we set up to do?
I think at some point in the second half of the year, we'll have a correction, and I think you buy that correction. I think we have a much healthier market in 2025 than we had in 23 and 24. At the midpoint of 23 and 24, what were we talking about? We were talking about 7 to 10 stocks that you can invest in and the struggles for the rest of the market. Now, when you look at the market, there is a much healthier diverse opportunity set. It goes beyond just equities here in the United States. If you look overseas, you'll see opportunities in Europe. Germany's outperforming up 20%, UK up double digits. You've got Spain up double digits, Hang Seng up double digits. Even here in North America, Brazil, Mexico, Canada outperforming the U.S. And we've had these concerns about fixed income. Well, taxable fixed income is doing great so far this year.
Let me stop you for 1 minute, because you're making a comparison. You're pointing out how strong things are, how great things are in the market. I'm wondering if you look below the surface, whether it's actually as strong as the record-setting move would suggest it is. And since you brought up 2024, underneath the surface, the number of New York Stock Exchange net new highs this prior Friday only reached 70, plus more than 370 in November of 2024. 70% of Russell 3000 stocks were trading above their 200-day average when the S&P 500 first rallied above 6,000 in November of 24. That number narrowed to 59% into the market's divergent February peak and only reached 45% last week. Those numbers would suggest that this is not nearly as strong a market now as it was in the period that you're pointing out.
So you're just specifically looking at the S&P 500. I'm looking at.
Well, I said the Russell 3000.
Well, the Russell has struggled and has struggled over the last several years because it doesn't have the earnings growth. I don't think just because you don't have in equities themselves the type of participation that you had in November. And by the way, remember in November you had the head fake in the Russell. In November, it looked like healthcare and other sectors that had been underperforming would actually participate, and they're actually not. So I don't know. I'm looking at it from the standpoint of how do you do asset allocation in a portfolio, and it looks pretty good to me because, as I said, it's not just equities, it's fixed income, and it's a lot of different places that you could go. Also, volatility has basically remained the same. And by the way, as it relates rather to the volatility in the Treasury market, we sit right now for a U.S. 10-year at 4.27. The average for a 10-year over the last 24 months is 4.27. So where have we really gone? Maybe to a lot of different places, but we ended up in the same spot.
The point of me bringing up those numbers is the higher stocks continue to go higher. You're not getting the bottoms-up breakouts. The
momentum's leading.
Well, momentum's leading, higher beta, lower quality is leading.
Sorry, Jim, but just because momentum is leading, that's not an indication that the market is reaching at an inflection point. When momentum rolls over, I'll be the first to say that you're reaching at an inflection point. And yeah, you're right. Some of the quality names are not performing right now. But I don't think we're getting to the exuberant level that we got in 21.
Joe, I'm with you on this, okay? And look, the numbers that you stated are the factual numbers, but there's a lot of stocks that in 2024, 2023 were absolutely left behind, did nothing, that are performing well right now. You can look at sectors, financials just as a sector. You can look at more value, and I know this has been talked about a lot in the last couple of weeks, value-y tech stocks like a Cisco, some of the non-AI chip names like a Qualcomm, like an AMAT, things that really have been left for dead are actually now performing. Industrial. So yes, there is, Scott. There's.
I know, but industrials aren't a value. Financials aren't a value. They're both at highs.
I would
both
disagree.
at highs.
Factually, they're at highs. I still think they're a value. I mean, certainly if you look at financials, industrials, a little harder to make that case. But financials, if you're looking at a lot of these stocks, you're talking high single-digit multiples, high dividend yields. Yes, a little bit of a premium to book. I'll give you that. Industrials, look, most of them are now in the high teens, bordering on 20. If you talk to me, and this is Steve, you talk about a new generation of investors. If you talked to me 10, 15 years ago and said industrials trading at 20s are value, I would have disagreed. But we're now 10, 15 years past that, and that's where these things trade. And that's cheap to the market.
One of the things I put in my note to you this morning was that the additional comfort in the market is that the rally has broadened. So with that, people that just don't invest for tech because they're afraid of the volatility, even though I look at volatility as risk, now have places to go. Industrials have done well. Financials have done well.
The big ones.
Right. The big ones.
That's part
exactly.
of the thing. If you look at the S&P versus the equal weight, it tells a pretty distinct story.
Yeah, and that's where the additional comfort they need comes in. So they want to go into the big names. The small names, they catch up when the markets are correct, And then the junk, I'm not saying they're junk, but generally the ones that are less popular will move and lead that recovery.
No, but look, if you look at the gains quarter to date from the high beta ETF, just to show you the kinds of things we're talking about, popular names that you hear about a lot on this program that many of you may own, either because you've heard a lot about them on the program or you know about the stocks because they play in many respects into the AI, Broadcom, Vistra, right? NRG, we're talking about powering AI. Look at the winners quarter to date. Vernova's up 73%, NRG 69%, Seagate 67, Vistra 66, Broadcom 61, Constellation 59. These are extraordinary gains in a very short period of time.
Yeah, Seagate for one, because it's more of a commodity stock. But if you go to the second list here, you take a look at Palantir. Palantir's become the ultimate cult stock here, where you can't justify the valuation, but you know their product and their technology is leading the pack, both in defense, and industrials have had a nice boost from defense companies. So Palantir's right in the sweet spot of all that. Look, to me, it's still a brand name market overall, and the biggest brand name of all is as you mentioned, is AI. And AI continues to go, and that's ratified by what we're seeing with Meta.
Yeah,
paying those
Meta hit a new high today, by the way.
Yep, and that's, I guess, my largest position again. It goes between that, Netflix, and one or two others. But Meta, he sees it. And so for all the narrative that, oh, well, you know, these stocks haven't paid off, they haven't recouped, they're spending AI, they're not going to for a while, but you've got to invest in the future. So if these companies were not spending what they're spending on AI, I wouldn't own them because they'll be left behind and you can't catch up.
Yeah. This is not an exercise to try and, you know, say that this record run is punk in any way. It's obviously not by any stretch of the imagination. It's also not trying to suggest that we're at necessarily some kind of top because of this kind of behavior. If anything, because of the institutional investor side of the equation that really hasn't fully bought in, it doesn't feel like.
Can I just interrupt for one second before you go? You know, when we talk about the record run, we're talking about recovery of losses and going back to the high. It's not as if we started at a high point coming out of 24. Now we're hitting a new high.
No, but the move off the bottom has been legendary.
Astounding.
Well,
legendary.
We're up 6% on the S&P 500 through the first half of the year. I mean, that's not bad. If you analyze that, that's well above the historical average. I wouldn't sneeze at that.
No, but a lot of the later stages of that move happened more recently.
I agree.
Right? We
and
were
also,
sitting like up 2% for a while on the year, and now we've had this little burst in the last week that's taken you even higher than that.
There is unequivocally room for areas of this market to catch up. Small caps is a key example of that. If the market is doing what I think it's doing, which is basically endorsing this plan of the budget bill plus tariffs as deficit neutral, economically stimulating, if that's what the markets are saying, by the way, I'm not going to walk away from that. That's what I think the markets are saying. Then small caps are the area to look at to catch up.
So the market has had these series of challenges in front of it in 25 and very quick resolutions. And I think that's been the catalyst. We've had the resolution. We're somewhat desensitized, as I've said over and over again, surrounding tariffs. I know July 9th is coming, but I think very few believe that there will not be resolutions as we move through the third quarter. You now are pricing in, from my perspective, the belief that on September 18th, you're probably going to get a rate cut. I think the challenge comes, and we do a lot of price pattern recognition. If you pull the lens back to October of 22 and see where this all really began and pull it through to today, you kind of go back, there's about 14 or 15 strong pattern recognition series that you could look at. And it looks like maybe somewhere around March of 26 is where you hit that significant inflection point, and this thing probably rolls over. And probably at that point, you run out of the tailwinds. You run out of the certainty surrounding the tax bill getting extended, the regulatory relief, the tariff resolutions. At that point in 26, it's kind of like, okay, what do I have? But up until that moment, you've got momentum that is clearly powering the market higher.
You also have if you think that the runway is in fact that long, you have the fear of missing out, FOMO, which is still that factor that's kind of sitting out there. And people are wondering, well, when is that going to provide you the next leg? Let me ask you this. As I said, we're going to make the turn. Do I want to lean into the same areas that we've been leaning into now? You know, Pasquarello at Goldman says, look to buy any meaningful dips in tech. You've had an amazing move for that sector in and of itself. The tech sector is set for its best quarter in 5 years.
I would. I mean, that's, speak with my feet and put my money where my mouth is, et cetera, et cetera. I think they'll still be the performers. And what I'm comforted by is that, look, they're a little overvalued here. Meta can't keep going up every day like it has. But, and nor, I can't tell you Microsoft, I'd buy it here because of the valuation. But the good thing about these stocks is that valuation is temporary. So what I mean by that is even if they sell off for any reason, they will ultimately recover because there's such unique businesses and companies. And everybody with AI and the productivity enhancements we'll get from AI, which we're already seeing, you're going to rush to these companies.
What about this, though? Insiders at Nvidia, according to the FT, have dumped more than $1 billion in stock over the last year. About $500 million worth of sales occurred over the last month.
I don't blame them. I would take some money off the table. Keep in mind, these people are, and when I worked at Lehman, I told everybody that worked for me to, long before I left there in 02, sell whatever you can as you vest, because you're leveraged, double leveraged. You're working there, so your income, daily income is dependent upon it. So why have everything in one basket? So to me, it's prudent management of their personal finances.
Can you make the statement from insider to the average Joe who loves Nvidia and bought the stock and sitting in a nice gain?
No, they're in a different position. I mean, if they have a very nice gain, sure, I think you should bank some of it, particularly if you have capital gains out of longer-term capital gains. But remember, we had the same conversation not that long ago when Bezos sold some Amazon and when Zuckerberg sold some Meta. I mean, they just sell, and that's what it should be. Now, it would alarm me if Jensen Huang found somebody to buy most of his position, right? But that's not going to happen. So that to me, it's a nice headline, but it means nothing.
So to answer your question surrounding technology, what's interesting is that a lot of momentum funds, mine included, were really carrying an underweight towards the semiconductor industry coming into this quarter. Now, we have the flexibility in rebalancing on a quarterly basis, and I'm very satisfied with how we've done so far, even being underweight semiconductors. But now you have the participation. Semiconductors right now are exhibiting very strong performance, and I would imagine that you're going to see a lot of repositioning from a lot of momentum funds into semiconductors that kind of been sitting in software. So I don't think the playbook changes very much in the second half of the year. If there is one area of the equity market I'd be skeptical to kind of buy into, even if you see a recovery, that would be small caps. I just don't think you need it. I think mid caps and large caps are giving you enough.
Have you sold all your small cap position?
Yeah, because remember, I got out of Casey's. That was my last small cap. I mean, mid caps, I've got things like, Wynn Resorts.
No, but you had like the IJR, I think.
Yeah,
it was,
I took that out. Took that completely
Would you
out.
get back into the small caps?
Is
there a catch-up trade to be had?
I think there is. And, as we talk about this rally, and Scott, as you entered the segment, you talked about FOMO, sentiment. Sentiment is real. And think about people who are watching right now, who are hearing the headlines of all-time highs, second day in a row. The first thing they do is they get back in the names that they know. Those are the Mag 7. But as they get comfortable more and more that the market's going higher, they broaden out. And while that broadening out may end up or start with large caps that people aren't thinking about, I already mentioned industrials, maybe it goes to healthcare, eventually it does get to small caps if, and this is the big if the economy holds in there. Steve, you're right. Maybe this second quarter.
I don't know about that, man. It's like a repetitive, it just becomes a repetitive thing. You've been saying that a year. If the economy holds up, small caps are going to do well. Well, you know what? The economy's held up pretty damn well, and small caps have done garbage. The small caps are down on the year when everything else is up, right? So you need something more, obviously.
Well, okay. I mean,
obviously.
Instead of, and that might be Fed rate cuts, by the way. It might be Fed rate cuts. I think you said September, or maybe you said September. I'll make the case that they actually should go in July. I mean, all these inflation numbers have two handles on them. I get it, we're data dependent, but we're now talking, we've got June in the bag as far as inflation figures go. There should be some tariff impact there. It's just not showing up. Maybe it'll show up in the June figures that get reported in the month of July, but if they don't, they really should be going in July. There's no reason not to.
Let's hit financials again. We didn't really hit it, but they did hit a record high today. Mike Mayo from Wells is talking about how deregulation is real. Goldman and JP Morgan are both at record highs. Jim, your Citi is the highest since December of 2008. You've had to wait a little bit relative to some of the others, but it feels like you're getting rewarded finally on that one.
Yeah, still just a little bit below tangible book value, and I've said all along I don't understand why it is below tangible book value. Look, I think a comparable here, I'm not going to put it on the same pedestal with JP Morgan. Nobody's on that pedestal, but Bank of America, Wells Fargo, those trade at nice premiums to tangible book value, and I think Citigroup will get there.
Bank of America is a dramatic underperformer relative to everything else this year. Why is that?
You know,
you still have that stock?
I do. I mean, the size of the position is nowhere near what Goldman is, which is also in my top holdings. I just think it's too vanilla, that you can't make an exciting story out of it. With Citi, it's the recovery that you're seeing across it. With even
strong consumer, you can't make a story on that. I mean,
no, not really.
Isn't that their bread and butter?
I think the average consumer is struggling, but so much of the spending, the overwhelming majority of the spending, is with the top wage earners. So you can't even make that story there, and you can't make it in banking, because even though they bank a lot, it's diluted by their massive other businesses versus more concentration.
What if everything, though, now, because they passed the stress test with flying colors, deregulation, everything else, you're going to be able to buy back more stock, and you're going to be able to increase your dividend, you're going to reward shareholders with more. What
it's
about
not
that?
a distinguishing factor, though, versus the others. They'll be able.
I'm talking about as a group, rising tides lifts all boats.
As a group, I like the group. You know, I continue to regret not buying Citi. I was waiting for it to come back down to earth. And
you should have listened to Jim.
I should have, but as you know, it's gotten me into trouble before. No, I'm only kidding.
It really has.
Goldman Sachs really.
It's been a great story. He's been dead on it.
The results of the stress tests really signal Goldman Sachs is in a good position.
Great position.
Deploy cash, deploy capital. And one of the interesting things is, you know, we didn't talk much about this last week. You had this rumor surrounding Bank of New York Mellon and Northern Trust, potential M&A activity. You haven't seen M&A, any significant M&A in the financial sector. And I think we might be at the cusp of that actually.
Well, you saw one almost last week, right?
Right, almost. And I think that's signaling, and it's a good test for President Trump's administration and what their flex is going to be towards M&A and the concerns that you might have. But that deal, I think, opens up the possibility that others, Goldman Sachs, that are now flush with capital, are going to be going out there and trying to acquire a lot of advancement in technological areas related to the financial
Goldman
services.
Sachs is in every single conversation I have with anything. In every conversation you're listening to, the people you're talking to, you or you. So that's why I like Goldman. JP Morgan's there as well. So B of A really needs a strong identity to get it going.
Let's get to a move before we get out of here in our A block today. Speaking of a stock that has ridden the market wave, MP Materials, Jim Lebenthal, it's up 50% in a month. It's up 105% in 6 months. It's up 158% in 12 months. And you are selling it.
This was my trade war play, and it played out. I said when I bought it, this was a strategic play on China, rare earth elements. That story's played out. I think this is a fabulous company. I think that it will do well as a company over the coming years as it continues to execute not just on mining rare earth elements, but refining them and building the magnets. The problem is that it's now more than fully priced. And as you think about the trade war, I think there's more room for trade war news to get positive than there is for it to get negative. I'm not ruling out that things get worse, that China doesn't restrict rare earth elements again, but it just feels like the story has fully played out. It's been wonderful. I've had fun with it. It's time to move on.
All right. No competition first half of the year. Netflix versus Disney in stock performance. Similarly, how we looked at Tesla and Uber last week, right? It's been no contest. No contest for the first 6 months doesn't necessarily mean anything for the next 6 months. So Disney's got 79% of analysts with buys. Netflix has 69% of analysts with buys. Next 6 months, Weiss, for the next 6 months, you have Netflix, Jim's got Disney. Which is primed to outperform given the run that Netflix has had and the one that Disney thinks it can still make?
You know, it could be Disney because they have really beefed up their offering with Hulu, the acquisition of it. But, you know, it'll just be a moment in time. I still think that if you're playing streaming, that Netflix, being the pure play, is going to do quite well. So I say with very, very little conviction that it could be Disney. I see no reason to replace Netflix with Disney.
We talked about catch-up earlier, and I mentioned it then. Applied Materials, that's catching up.
Okay. Weiss, you able to do this?
Yeah, unrelated to the cough I had,
Yeah.
United Healthcare. So
Okay.
I'm not going to drive
All right.
their MLR.
Well, I hope they cover whatever you have.
Not a member,
Joe.
unfortunately.
Mercado Libre.
All right. So we'll see you at 3 o'clock for closing bell. We are green across the board as we try and extend these record highs even further. That does it for us.
Hey everybody, welcome to Blue Cloud Trading. My name is George. It is Monday, June 30th. Hope you all had a good weekend. It's going to be a short week this week. Friday, of course, no trading, 4th of July. I think Thursday it's going to be a short day. The market closes at 1 p.m. on Thursday. But we're going to take a look at the markets for today. Let's see how they performed. And we're also going to take a look at some of the stocks that were discussed on the show. There were about 16. Actually, there were more than that, but some of the stocks that are in my portfolio you won't find here. You'll only find those when I discuss them in the members-only videos, so consider becoming a member. Now, but I will cover these stocks that you see here. There's about 16 of the stocks that they talked about, plus a few ETFs in there. We'll look at the S&P 500, the QQQ ETF, the Dow, the Russell, the VIX, and the Euro Stocks FEZ. We'll also take a look today at some of the Mag 7 stocks like Google, Tesla, Amazon, and Apple, and about 9 member requests. So we're going to look at all those stocks that you see there in the list on the left here. And before we do, one of the things I like to do is take a look at the markets and see how they performed, because it is after the close right now. It's 5:18 p.m. as I'm recording this video. The Dow was up 0.63. It was, it gapped up in the morning, and then it just kind of moved sideways, and then just slightly closed above the high there from around 12 p.m., just a little bit above that level. NASDAQ did something similar, a little gap up, and then it just kind of went down, and then around 3 p.m. it moved up, creating a shooting star, though, in the last candle there. S&P 500 up 0.52%, and the Russell 2000 just 0.14%. The stocks within the S&P 500 that performed the best today were, I guess, Oracle, Palantir, a lot of some of these other technology stocks that you see right there. CrowdStrike was up 2%. Broadcom was up 2.34%. The financials did well. Amazon, Tesla did not. Amazon was down 1.75%. Tesla was down 1.84%, and Google was down 1.29%. Meta was up 0.61%, and Apple was up 2.03%. And so, yeah, let's look at the sectors also. Let's see how they, which of the sectors was up the most today. And you'll see technology up 0.86%. Let me zoom in a bit so you can see that better. 0.86% for the day. Financials and healthcare were next. And then the worst performer was consumer cyclical and energy. Here's the 1 week performance. Going back to last week, real estate, energy were the worst performers. Communication services, technology were the best. All right, now let's go ahead and get started. And remember, if you guys want to support this channel, one of the best things you could do is, if you're on your computer right now, in the bottom right hand corner you'll see a little subscribe button. Just click on that and you can subscribe from there. But if you're watching this on TV, now there's so many methods to watch YouTube videos. If you're watching it on TV, I think you just kind of scroll down and hit that subscribe button, folks. And remember, this is the home page right here. Once you've subscribed, you'll have the option to also get access to members-only videos that I basically post right here. I did one day ago, for example, and I go over the entire portfolio that I hold. All right, and then there's 3 different memberships. I'll just briefly show you guys those here: Blue Cloud Supporter, Blue Cloud Trader, and Blue Cloud Legend. And under Blue Cloud Supporter, you're helping the channel. You can request a stock to be analyzed on the show. Under Blue Cloud Trader, you can do the same thing, and then you can also access those exclusive member-only videos. So under the Blue Cloud Trader level, you'll be able to access those videos. Under Blue Cloud Legend, you get all those, plus some day trading videos and daily trade updates on my trades. And I do that once a day, and I post them. So once you become a member, for example, you will see this pop up. Okay, membership. This is a new tab that you'll notice. and then that's where you'll find those posts. All right, let's get into the stocks now. Start off with the indices first, and then we'll get into those CNBC stocks. We saw, Steve Weiss, and Jim Lebenthal, Joe Terranova were on today. All right, so the S&P 500, all-time highs, up 0.48%, continuing to move up. Broke through that 613.23 level on Friday. Here we are again, just moving on up. So I do like this. The ADX is still moving up. This is all looking good still. We'll see how long this can continue, this trend. It certainly is a strong one. The QQQ ETF also looking good here, still moving up 0.65%. The DIA ETF also, same thing, up 0.61%. And we're using the Ichimoku indicator very quickly, guys. What we're looking for is price to be above the two moving averages. Ideally, you want to be above that 200-day moving average, which is the yellow line, the dotted yellow line, and we have that right there. We want price to be above the Ichimoku cloud. The Senko span A needs to be above the Senko span B. That's the light colored blue line above the purple one, where you can see here it was not the case back here. And then we want that white line that's hovering in the background. That's called the Chiku span. That's today's closing price, projected 26 periods into the past. We want that to be above the candle 26 periods ago. And it is. So that's telling us that all of the elements of this indicator are giving us a bullish outlook for the future. In fact, it's the only indicator that projects into the future. So you can see the cloud here is actually 26 periods forward. And it's derived by taking the midpoint of the two moving averages, the 9 and the 26, the green and the red. Okay, it takes that midpoint. If you go 26 periods into the future, that's where you'll find it. And then the purple line is actually the midpoint of the last 52 periods. Okay, of the candles. So the days, all right? So that's going to give you some insight as well. Typically, most moving averages, they plot right under the price, right? Under the price, like the Tenkan-sen, Kijun-sen, for example, are plotted right under the price, not the cloud itself. That's what makes it very unique. It's a Japanese indicator, originally incepted in the late 1930s. Think about that. It got published in the late 1960s to the public. And then it was brought to the U.S. and it started becoming adapted here in the 1980s. And then, of course, with technology, right? Imagine having to plot this on a piece of paper. Now, obviously, it's just everything is so automated, right? And you can find this within the TC2000. This is the software that I use right here. I've got the directional movement index as well, helping me basically to signify the momentum that's happening. The white line, that's the ADX, is moving up. That's positive. The green line is above the red line. So if you guys are interested in using this type of software and setting up your layout exactly like I have it, really easy to do that. You can actually get a discount, also a $25 coupon, and only pay $5 for the month. And to do that, basically to try it out, $5 for 1 month, you can try it out. What you do is you go over here at the top of my page, click 9 more links, scroll down, and you will find that link right here. Okay, and you just add your email, download the software for Windows, or if you have a Mac, you can do the Mac version. Here's the pricing here, and then the software plans, and the monthly fee is $29.99 for the gold. Now I recommend this one to start off because you want to be able to draw on the charts and set up the layouts like I have it. You won't be able to do that on silver. Okay, you can do it on gold, and you'll just pay $5 out of pocket with that coupon. So let's go ahead and get started with more of these analysis of the Russell, for example. Now, here's an interesting thing that happened here on the Russell 2000 today, June 30th. You can see that the price, okay, it gapped up in the morning. It gapped up, got above that 200-day. That's the dotted yellow line that you see right there. And then what happened? It closed super close to the 200. In fact, I looked it up, and it was actually just barely closed above it. So if we look at the price in this little box that populates, once I hover here, at the top of the corner there, you'll see the closing price was $215.79. Okay. And the 200-day moving average, which is somewhere in this vicinity, you'll see that there, was $215.72. So it was up above that, all right, by 7 cents. closed above it. That's not really a super strong signal for me. I'd like to see a more bullish candle, higher volume. We didn't get that either. In fact, the volume today was actually lower than the prior day on Friday. So I wouldn't trust this. This could easily just pull back again, all right? The VIX was actually up 2.51%. We don't want to see volatility increasing in the markets because that tends to scare the market a little bit. And maybe that's why some of the big names dropped today, like Amazon, Tesla, and Google. So, yeah. So basically what we want to look at with the VIX is we want to, at least it's still under the moving averages, it's under the cloud. That's conducive to a more bullish market. So that's positive. FEZ, this is a Euro Stocks 50 ETF. This one was up 0.40%. The only negative here with this one is the cloud itself is still bullish, right? But if you look over here at the Tenkinson, the green line, the 9 period, it's under the slower red line, and that's not good. It's just basically telling us that, hey, this is not a really strong trend, or at least not as much as it was in the past when you could see that right there. It has pulled back. It did drop under that low right there briefly. What we don't want to see is, the potential of this thing turning over. Like it maybe comes up to 60.14 and then it starts to drop. Because if that happens, you'll essentially have a lower high here from the prior high. You already have established a lower low here from this low. So that's not good. So let's hope that it can break and get above these highs over here. And if it does, that's really bullish. Okay. All right, let's take a look next at the stocks they talked about on the show. And we have Mercado Libre. This was Joe Terranova's final trade. And he recommended this back on May 22nd. He also recommended it today. On the weekly chart, it's still pretty bullish here. The only problem with this one is the fact that it's reached that level of the high there of 2635, and it's actually stalling still. It has not broken through. So it's a resistance level. I would not be adding a position here. I'd wait for it to break out. That's going to give you a higher probability trade because a lot of times prices can get stuck here for a bit. And so I'd hold off on that one for now. STX, it does look good overall though. STX, Seagate Technology Holdings, very strong trend. I do like this quite a bit. You can see that it has been moving quite, for a while here. So that's a nice technical there. The sales growth has been negative, 8.38% over the last 5 years, but there's no question that there's a lot of interest in this right now, and the cloud turned bullish. So you can see that there, that future cloud is bullish. ADX is moving straight up, and once it broke those 113, that 114 level there, and that's was Stephanie Link's recommendation back in August 30th. I'm guessing that was obviously from 2024. So let me see, where was that? August 30th. It was around this time that she recommended it, right about here. So she's up about 40% if she's still holding it. I don't know if she still is or not though. Okay, next one is Disney. Disney is Jim Lebenthal's final trade for today. It was also his final trade on May 20th. And this one here has recently broken through some levels. That's prior high of 118.63. It looks like it's maybe stalling around that level there too, the 123 or so. See this prior high? And then there's another high of 126.68 going back to this date right here, back in 2022. I think once it breaks that 2022 level, which is from 126.68, I think Disney could really take off because then it doesn't really have as much resistance, basically. Okay, it's already starting to become very bullish here. You can see the cloud turning bullish. It is above the 200, but the 200 is sloping down still, and that can be a little bit deceptive because you might think, oh, it's above the 200, but sometimes it's like a magnet, the 200 day, and sometimes it might come back to it, and so are these moving averages. So we'll see what happens with Disney. WDC, Western Digital Corporation, has broken through this high, and that's a weekly chart you're looking at right now. So, and here's a daily. So I like WDC. It looks a little bit extended at this point. It's a little bit, but it's hitting new highs. It's hitting new highs all of a sudden. So it looks very good. Sales growth rate is a little low, down 5% over the last 5 years, but get a positive operating cash flow, 1.3 billion. Profit margins are still strong at 11.43. Their next earnings, though, are at the end of July 30th, so that's coming up. Remember that you can have a big decline if they don't perform up to snuff. So we'll see what happens. XLK is the technology sector. This one is continuing to move up, obviously up 0.98%, looks good. The momentum factor ETF MTUM is still looking very bullish as well. It broke this prior level from here back in February. It broke this little high right there. Let me show you the level there. Broke through that little level, so it's continuing. I like it. CEG, Constellation Energy Corporation. We just recently had a positive crossover of the faster moving average above the slower one, so that's very good. But we've got some negative candles here. I wouldn't be adding based on that. BAC is coming close to resistance now. You can see that right there. But if you can get above that 48 level, and then around 48.50 is what I'd be waiting for it to break through. Bank of America. That's the daily. There's the weekly chart for you. JBL, which is Jabil Inc., technology sector, electronic components. This one's been doing pretty well. June 12th is the date that Kevin Simpson recommended this. So if we go back to June 12th, let's go to the daily chart for that. It was somewhere around here. Yeah, right there on that little candle. It's already moved up 21%. So that was a good call by Kevin Simpson. He was not on the show today. SMH, semiconductors, VanEck Vectors Semiconductor. This one's coming close to the 283.07 level. That's the prior high back here. So I would not be adding when it gets that close to the resistance level. I'd hold off. But it's a strong uptrend on the daily and, of course, on the weekly chart. So let's just hope this doesn't turn into a very bad situation, because when price comes close to prior highs, like over here, all right, it can be, there's a lot of shorts waiting here to potentially short the stock. We'll see what happens. VST, same thing, is coming to a resistance level of 199.84. It's just 3 pennies under it. That was Joe T's final trade. I would not be adding that one. That's the weekly chart. Here's the daily. Strong uptrend, but coming close to resistance. NRG. Energy is, it's stalling at these levels. Okay, so that one also needs to break through some levels there. Here's the weekly chart. Overall, I like the charts. They don't look terrible at all. Tankinson just recently crossed back above the Kijinsen. ADX is moving up. Positive DI is above negative DI. AMAT, Applied Materials. That was Jim Lebenthal's final trade today, June 30th. It does look good on the daily time frame. It just recently broke above the 200 a couple of weeks back. And then on the weekly chart, though, it's still under the cloud. So, as I've mentioned before, you're taking a chance. This thing could certainly break into the cloud and break above it. But generally speaking, you're still in a downtrend on the weekly, which is the higher time frame. And so I would hold off until it breaks through. I do like to use the Ichimoku for guidance, On a positive note, it did break a trend line. So you can see this high and that high right there. If we extend that out, it broke it like about 3 weeks ago. But we still have a lower low here from the prior low. We have a lower high here from that high, and that one is lower than that one. So it's, maybe we'll get something here, but just be careful. If you're trading this, you have to make all your decisions based on the daily time frame, and maybe you might want to use one of these shorter time frames too, like the 2 hour. Okay. All right, let's keep going. UNH. I don't like this one. This was Steve Weiss's final trade today. I mean, it was up 0.93%. Here's the daily chart. It is starting to get above the moving averages here, but it's still under the cloud, under the declining 200-day on the daily. And here's the weekly chart. That's something I want to bet on. A lot of times these types of patterns here, they're very short-lived. You can see how it's moving up right there. That's almost like a bear flag type situation, okay? And that can be, it's a negative situation. Here's another one. See that right there? And then boom, it drops. So you have this little false hope of the thing is going to take off. And yes, it even broke through that cloud there, but then once it got back under the 200, weakness. All right, MP is Materials Corp, MP Materials Corp. I actually had a position in this one in the portfolio a couple of times, actually, back here too. Back in March 6th, I closed out of it back on March 18th for an 11.4% profit. This one here just recently, let me show you the daily chart. I added this one back on June 16th. This was one of the 20 stock ideas that I usually do every weekend where I share with members. And I got out at the perfect time, June 20th. You know, sometimes if you've been trading for over 20 years, like myself, guess what? Intuition comes into play. And these candles, they speak a lot. They share a lot of information. You guys are familiar with the candles, I'm sure. If you're not, you should educate yourselves on the bullish and bearish candles. They can give you some insights on what might potentially transpire in the future, because it shows the psychology of the buyers and the sellers. Okay, so when you get negative candles like that one right there, like this one right here, the shooting star, and then you get that hammer right there, okay, after a move up, that can be very negative. It can lead to a decline, and it did. If we look from that point there, it dropped 13.5%. So I'm glad that I kept that profit on that particular trade. Here's the IJR, Small Cap 600. They talked about that a little bit. Jim Leventhal was recommending this back in November and January 31st. Well, we know the small caps haven't really had a big move. I mean, they have moved up since April 9th. It's moved up 21.58% on the daily chart. Okay, so small caps have moved up, but they keep getting stalled right here, and they're still under the 200-day. So I'd hold off on that. Here's a weekly chart, still under the cloud. All right. All right, next, let's take a look at some of the Mag 7, the ones that are not in the portfolio. Remember, I only cover stocks that are not in my portfolio generally. Sometimes I'll throw one or two in there that I choose to, like the one I just showcased to you guys. But generally speaking, I don't cover the stocks that are in the portfolio here on the free show. Google down 1.29% back into the cloud. So it got above it briefly, gapped up above it, in fact, and then whoop, just dropped. That's the weekly. Let's look at the daily chart. On the daily chart, it is above the cloud. So that we're looking at there is the weekly chart. On the daily chart, you can see last week it had that little move up. This right here is a very negative pattern called dark cloud cover. See those two candles? Price gaps up and then drops and closes within the body of the prior candle. And I've talked about that 1,000 times probably. There it is. Dark cloud cover moves up. The price gaps up. Price drops, right? The sellers are in control. And it closes within the body. This is after a move up. And that's exactly what we have right here with Google. So we might see Google pull back tomorrow. But it's a higher probability. There's no guarantees in the markets. There's no guarantees at all. Something really positive could come out in the news, and then this thing just breaks through prior highs and everything else. So you could have a big jump. But based on what I'm seeing, all right, I'm more bearish for tomorrow, at least for Google. Tesla, because we are looking at daily charts after all. And by the way, if we look at the weekly chart, it's also not looking particularly bullish, right? Tesla, inside the cloud still. On the weekly chart, nothing to do here. On the daily, still dropping, down 1.84. Amazon, looking strong still, but it did have a down day today, down 1.75. It's one of the stocks that I'm considering adding to the portfolio soon, but today was not I didn't get that, feel like this is the right time to get into Amazon. So I'm still not holding this position. Apple today had a good day as far as the Ichimoku indicator is concerned. It did break above the Ichimoku cloud today. But it's been in this very, very long and extended consolidation stage, and it's still within it, in that little box that you see right there. All right, so I wouldn't be doing anything with Apple. It's still under the 200-day. It's still under a very, very long and extended trend line there. Got lower highs, lower lows mostly. And then if we look at this on the weekly chart, still under the cloud. And I don't buy stocks that are under the cloud on the weekly or daily. All right, and these are the member requests. These are the strongest ones here, right here. I've got 5 colored with a blue flag there, and these 4, they might be good, but I'll tell you what I'm seeing that's not particularly bullish yet. All right, NEU on the weekly chart. Let's extend this out a little bit, make it bigger. On the weekly chart, looks very bullish. We broke through, you can see that high right there. It's 2 days in a row now, Friday and Monday. So I like this one on the weekly. This is a weekly level. Let me color that blue. One important thing to do sometimes is to, like, if you're drawing trend lines, horizontal ones or whatever, based on the time frame, have a different color. Like for the weekly, I have a light blue. On the daily, I usually have a light red, and it just helps me to know which one is stronger. Remember, the weekly is always going to be a stronger level of resistance than the daily. So the fact that it broke through, I think I can see this continuing its move. There's a lot of interest. How do I know that in this stock? Look at the volume down here. Okay, significantly higher than it was for a long and extended period of time. Okay, so it's breaking through. What about the directional movement index? That's also giving us some bullishness here. Green line above the red line, right? Positive DI here is above the negative DI. ADX is still moving straight up. I like it. And then on the daily chart, it looks good too. So I'm giving this one a thumbs up. Granny Shots. That's the GRNY. That's Tom Lee's ETF. He introduced this one back on November 7th. It didn't start off that great in the beginning. It was going sideways and it dropped in April, but it's had a nice recovery from the lows here. It's up, since the low, since the, April 7th date, it's moved up 50%. Now, from the inception of when he first opened this, it's only up 13.3%, but that's still pretty good. He's mostly invested in large cap here. So these are big names that he's invested in. And it's looking good still on the daily and on the weekly chart too. Coinbase. But he's always touting the small caps. He does love those small caps. He thinks those are going to do well too this year. I don't see that. They didn't do well last year. I don't think they're going to do that well this year either. All right, let's take a look at Coinbase. COIN is the ticker symbol on this one, and on the weekly chart, it's kind of stalling here at these prior levels. See this one, this high right here? That goes back to 2021, guys. November 12th, 2021. You see the years down below here. All right, so the fact that it's coming to that level and it can't get through, that's important. That's an important thing to note. I'd want to see it break above 368.25, basically. And then it will find some more resistance at 429.54. How far are we from there? About 18.6%. So Coinbase, that's what I'm seeing here for that one. PRCH on the weekly chart, stalling here. That should be a weekly color. Let me just change that. There we go. Or maybe it is a daily. Let me just double check. Yeah, it is a daily. Sorry. All right. Let's put that back. It is a daily level. It's based on this. I usually color it. I put a little circle to like identify where where this is derived from, the 1220 level. And it's derived from this date here back on May 20th. But if we go back in time on the weekly chart, notice where it hit it. Isn't that interesting? Do you see that? See how price came down to that level, that 1220 level, and bounced? And then it found, if we zoom a little bit, let's zoom over here, because there's a level here too, right there where it stalled. And let's see here. Let me zoom in on that so you can see the candle that I'm talking about. It's the only way you'll probably be able to see it. Notice what happened here. See that candle? How it stopped right on it. And then the very next day, or next week, it basically gapped down under it and then continued its way down. But it's interesting that it's respected. The 1220 level is a respected level. That's what that tells me. And it's been used multiple times. Look, it came up to that level back here too, close to it, and then dropped. Over here, it got stuck a little bit, but that's very interesting. Okay, anyway, I love technical analysis. There's so much information. Like it's interesting how the behavior of stocks, it's very similar. You know, and you can see the storyline basically, where the stock was, where it is now, what's happening, right? You can see it visually instead of, just crossing your fingers and hoping for the best. You at least have some kind of system in place. You've got some rules, that you can utilize here with technical analysis. And this indicator, the Ichimoku, is a fantastic indicator because it is completely rules-based, all right? And you can still throw more rules on top of the Ichimoku, right? Like using the highs and the lows and the prior levels where price might get stuck. And so PRCH, that's what's happening right now with this one. Here it is on the weekly chart, like I said, and on the daily chart, it's stalling. Now, if it can break through that 1220 level, okay, I can see this moving up some more for sure. The fundamentals are not perfect here. You can see profit margins are negative 2.59, but the technicals do look pretty strong. SGHC is Supergroup Limited. It's a gambling sector or industry. And you can see that one looks pretty strong too. Now it's down 1.17%, as you can see here for the day. And on the weekly chart, it is looking very strong though. Looking very strong still on the weekly. It did form a spinning top. That is a reversal candle. It might pull back a little bit tomorrow. Maybe it'll drop up to 6% and find some support at Tengensen and then continue its way up, just like it did in the past, like over here. Right? Comes down, touches, and takes off. Right? Over here, kept on finding support at the moving averages. All right? And then once it got above, like you see over here where it got under, once it popped back above, you see that nice incline. All right, so let's go to the next one. TS is Tenaris SA. This one here looks great on the daily chart. It's up 1.33%. We've got a bullish cloud in the future. We've got the Chiku span above price. We've got Tengensen above Kijinsen. It's above the 200 rising 200-day moving average, not declining. Everything looks good with the directional movement index. Now, why does it not have a blue flag here? On the weekly chart, I noticed that the Chiku span is still under price right there. I also noticed that the Tengensen, the faster moving average, is under the slower one. That's pretty much it. And if you look a little bit further here with the directional movement index here, the negative DI is still above the positive DI. That's also not a good thing. So there's a few negatives here with this one on the weekly, but on the daily chart, it does look like it's taking off, right? It, in fact, today broke through this little high here. So it's not a perfect candle. It is a reversal candle, but it did break through that level. And that's almost like an ascending type triangle pattern that you see right there. Next one, KALU, K-A-L-U, Kaiser Aluminum Corporation. This one on the daily chart did, in fact, break through this high on Friday and then came right back under it. So, or did it not? Let's find out. Let's get the exact dollar amount. So the high there was 80.18. That's the high. Let's throw the trend line on there. Okay. Yeah, it did. So you can see on Friday it basically got above. Today back down, closed under it. You know, it might just be taking a breather after a little breakout, I guess. It wasn't really a great candle to break out on. It's a spinning top type candle. Those are not really that ultra bullish when they're breaking through a level of resistance. So it might come back down, retest that Tengensen, and then get that extra power that it needs to break through. Now the next earnings are on July 23rd, so those are coming up. So watch that date, right? Here's a weekly chart on this one. Okay, here's a good reason why it makes sense that it stalled right here. And this is the advantage of using 2 time frames instead of just using one, like the daily. If you also consult the higher time frame, the weekly, you can get some more information, like the fact that price is still inside the cloud, has not broken through, right? So maybe wait until Friday. I take that back. Friday the market's closed. Wait until Thursday of this week. It's gonna be a short day on Thursday, but if price closes above the cloud here on the weekly, then you'll have a higher probability trade. And then of course it will also be above that 80-18 level at that point. So that's something I would watch. COHR is Coherence Corporation. This one's broken through the 200-day moving average. It's looking pretty bullish. I like this on the daily, but on the weekly, it's inside the cloud. So it might stall. It's about 3% away from the top of the cloud. Chico Spin is still underpriced. So there's my advice there. MU is Micron Technology. This one on the weekly chart, down 1.21%. It is above the cloud. The cloud itself looks like it's just now, there's a little twist taking place. The Senko Span A is trying to get above the Senko Span B right there. How about the daily chart? Yeah, it's pulling back a little bit here. So this might still pull back some more, maybe another 7%. It looks like to the support level of 114.80 based on this high here from November of 2024. It might pull back that much. So just keep that in mind. Notice how the momentum has come out a little bit out of this up move here. The ADX signifies momentum. When you see that white line start to drop, that tells me that there's maybe some selling or profit taking that's taking place. It could be for a myriad of reasons. You see the higher volume down here. A lot of people were coming out of the market. You see that volume? That's what that tells me also. So there's a story here, and I don't know why. I mean, you can do some further research to find out. One of the things you can do is you can go to FinViz and type in MU, for example, and we can look at some of the news down below here. And I'm not sure we're going to find any info. It doesn't look like we're going to find it right here. But yeah, I would not be adding here. I would wait for it. Let's see if it can show some strength again. Maybe this is a short-lived little pullback, right? And guess what? That makes the end of this video. Thanks for watching, guys. Remember, to help support the channel, one of the things you can do is subscribe, and that's free to subscribe. It doesn't cost a penny. My videos will pop up on your, in your YouTube here under subscriptions once you do that. And then if you want to go one step further to support the channel even further, click the join button right here, this link here, or this plus sign. If you click on that link right there, it will pop up this, and you can support me by becoming one of these 3-tiered memberships. Okay. All right, guys. Thanks, and I'll catch you all in the next video.